How the United States dominates international finance. Numerous important reasons have contributed to the United States' long-standing dominance in global finance. The U.S. dollar, the world's main reserve currency that promotes international trade and investment, is essential to this dominance. The U.S. economy's size and liquidity, as well as its strong institutional foundation and military might, all contribute to its financial leadership. Technological developments and new threats from competing economies, however, may undermine this dominance. Gaining an understanding of these processes is essential to comprehending the intricacies of modern global finance. Number 7. U.S. dollar as reserve currency. A key component of American financial domination, the U.S. dollar's position as the primary reserve currency in the world dates back to the 1944 Bretton Woods Conference. A new international monetary order was created during this meeting, with currencies tethered to the dollar, which was convertible into gold. The dollar has maintained its standing despite the gold standard's demise in the early 1970s for a number of reasons. Trust in the U.S. economy and political stability is reflected in the fact that almost 60% of the world's foreign exchange reserves are stored in dollars. About half of all transactions worldwide are made in dollars, making it the favored currency for international trade and a need for nations involved in trade. Number 6. Economic size and market liquidity. With the largest economy in the world, the United States contributes over 26% of the global GDP, giving it significant economic clout and sway, particularly in the U.S. capital markets, where a wide range of financial instruments, including stocks, bonds, derivatives, and commodities, are traded on a daily basis. This magnitude helps to create unmatched market liquidity. These markets' depth guarantees that investors can enter and exit positions with relative ease, reducing the risks and expenses of illiquidity and transaction costs. Particularly noteworthy are U.S. Treasury securities, which are regarded as among the safest investments in the world because of the U.S. government's excellent credit rating and track record of repaying debt. Because of this, demand for dollars is increased, and its role as a reserve currency is strengthened during periods of market instability or economic uncertainty as foreign governments, institutional investors, and individuals frequently look for these securities. Number 5. Institutional framework. A vast array of organizations that support international financial transactions make up the complex and comprehensive institutional framework encompassing U.S. finance. In order to improve capital flow and investment opportunities globally, major financial institutions, including investment banks like Goldman Sachs and J.P. Morgan Chase, hedge funds, private equity firms, and technological businesses like PayPal and Stripe, engage within this ecosystem. A large amount of foreign capital is raised on Wall Street, a worldwide financial center, through bond issuances, initial public offerings (IPOs), and other financial instruments. This concentration of financial expertise fosters innovation in financial products and services that cater to diverse global needs. Moreover, regulatory frameworks established by entities such as the Securities and Exchange Commission (SEC) provide oversight that enhances investor confidence by ensuring transparency and fair practices within U.S. markets. Number 4. Military power and financial privilege. By creating a perception of security that draws foreign investment into assets denominated in U.S. dollars, the United States military might greatly support its financial dominance on the international scene. Investor confidence is bolstered amid geopolitical uncertainty or crises by the belief that the United States, with one of the most powerful armed forces in history, is a stabilizing influence in international relations. Investors tend to turn to safe haven assets like U.S. Treasury bonds or blue-chip stocks listed on major exchanges like the New York Stock Exchange (NYSE) when conflicts or economic instability threaten other regions. such as during wars or natural disasters. Because of this tendency, demand for these assets rises during volatile periods, lowering government bond yields and enabling the U.S. government to borrow money at lower rates than many other countries can. Number 3. Fiscal dominance. The term fiscal dominance describes how monetary policy decisions within an economy can be greatly influenced by government fiscal policies. This dynamic is especially noticeable in the U.S. because of its distinct institutional structure. The federal government frequently enacts broad fiscal policies to boost growth through higher spending or tax breaks during economic downturns or crises, such as recessions or worldwide pandemics. For instance, in order to assist people and businesses impacted by lockdowns and economic disruptions during the COVID-19 epidemic, Congress authorized many stimulus packages totaling trillions of dollars. In response, the Fed usually lowers interest rates or participates in quantitative easing, which involves purchasing government assets to support these fiscal measures by promoting lending and investment activities and maintaining financial market liquidity. Number 2. Geopolitical influence. Through its economic policies and practices, the United States, as the largest international creditor and debtor nation, has significant impact over international trade dynamics and economic accords. Because economies are interconnected, changes in U.S. monetary policy, such as adjustments to interest rates or quantitative easing policies, can affect capital flows into emerging economies or global commodity prices. For example, oil prices frequently respond sharply to changes in U.S. policy. In order to preserve good relations and access to American markets or investments, many nations also match their economic policies with those of the United States, since they depend on being able to conduct business in U.S. dollars. Number 1. Challenges ahead. Despite its current dominance in global banking, the United States faces a number of possible obstacles that, if not actively addressed by financial leaders and authorities, could jeopardize its position going ahead. By promoting their own currencies for international trade settlements, emerging economies like China are actively looking for alternatives to relying on the dollar. Programs like China's Belt and Road Initiative are designed to improve trade relations while lowering reliance on Western financial systems that prefer dollar transactions over local currencies or other arrangements like barter. Furthermore, new technologies, especially blockchain applications and digital currencies like Bitcoin, present new difficulties by providing decentralized ways to conduct cross-border transactions without depending on established currencies like the dollar. Proactive measures will be necessary as the global financial scene develops further in order for the United States to preserve its crucial position in international finance and successfully negotiate the challenges of a changing global environment. If you liked our video, please hit the like button and subscribe to our YouTube channel.